day.
There's Apple's under pressure.
You buy stocks on Tuesday and sell them on Friday.
The market is as volatile as you'll ever see.
Traders saying this is the craziest day they have ever seen in these markets. Veteran traders saying they've never seen anything like it.
This video is sponsored by the award-winning Daily Market Movements trading platform. To open a live or demo account, simply visit dmmtradingplatform.com. Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analysing the S&P 500 futures chart. Just before I start today's video, anyone who would like to join my free analysis group over on Telegram, then scan this QR code now. It's completely free, it's a no-brainer. And I just basically give you the latest updates and trends in the market. But let's start with analysing the S&P 500. Very strong close yesterday. We actually reversed most of the losses. We went down, of course, and tipped that and touched that 0.23 fib area. That was an area where I said that we would likely target after breaking below that 50-day moving average. And we formed a very positive-looking candlestick. Now, the big dilemma is that we have the jobs number coming out, and I think the expected number is 318,000. And of course, we're trading in an environment where good news is bad news and bad news is good news. So if we have a number that's stronger or at 318,000, then you can expect us to probably go and retarget that 0.23 fib area. If we take out yesterday's swing lows, that then opens up a trapdoor, and I think your next line of support is around 3,800. But if the number comes in weaker than 318,000, then you can expect this market to rally rather significantly. We could break above that 50-day moving average and go and perhaps target the 50-day EMA. And this is largely due to the fact this week has been atrocious in terms of returns here for the S&P 500. We're currently down 5.67%. In fact, yesterday at the lows, we were down 7% in 1 week. So if the number comes in worse than expected, then you can anticipate a move towards the upside. It's very positive that we formed that hammer candlestick yesterday because, as I was saying to my free analysis group yesterday here over on Telegram, it's very similar to the chart that occurred in 1962, the bear market, that is. And, we're currently in this phase here, and, what's important to identify that occurred in 1962 is that when we had that huge bear market rally, we didn't actually go and touch the lows. We went close to it, but eventually going into the year end, we had a significant rally, and that's what I'm kind of looking for at this moment in time. We are approaching that close area to hitting those June 16th lows, but we're not quite there yet. And as I've been saying on my YouTube channel, I really do anticipate from October 1st is when we are going to see an almighty rally going into the year end, because it's important to understand that yes, the economy is weak at this moment in time, but the economy and the stock market are two completely separate things. And a prime example of this was March and April 2020. The economy was in terrible shape due to the lockdowns with regards to COVID, but the stock market had its best year ever. So very important to understand. But I've been accumulating the past couple of days here, and I'm going to continue to do so, especially if we drop down lower, because ultimately going into year end, I'm expecting the market to be trading up above 4,500 area.
There's Apple's under pressure.
You buy stocks on Tuesday and sell them on Friday.
The market is as volatile as you'll ever see.
Traders saying this is the craziest day they have ever seen in these markets. Veteran traders saying they've never seen anything like it.